But as recently as last year, this has come up quite a bit to just $3.5 billion compared to $2.9 billion the year before in 2023. So clearly, there's a lot of money in the sector, but it is a lot less than it used to be. Next slide. And if you look at how these funds have flown, we sort of divided Africa across 5 regions, with South Africa as one region, North Africa, West Africa, East Africa, South Africa, and then sort of Central Africa. You can see that West Africa has actually received the lion's share of the funding with $4.1 billion, although South Africa as a country has 2.9 compared to North Africa at $3 billion. But that tells you the cumulative of money that has gone in over the last 4 years, but the trend is consistent as in terms of the decline of the funding available. And you can see for West Africa, it peaked back in 2021 at $1.7 billion. And as recently as 2024, you had only $300 million. Next slide. And then across the different levels, thank you. Thank you. Across the different sectors in terms of the stages of the enterprises, you see there's funding available for seed financing, Series A, Series B, and of course growth. And we are talking about here funding for innovation and scale. So it covers the entire gamut in terms of what digital creatives should be looking at when they want to raise funding. This slide just talks about, the top 4 digital economies in Africa: Egypt, Kenya, Nigeria, and South Africa, showing you how much it has been raised in each of those countries over the last 4 years, with Nigeria topping the list at $3.4 billion, followed by Kenya at $2.4 billion, and then South Africa and Egypt. That tells you again the depth of capacity in terms of funding that's available for the digital economy in Africa. And where are these funding sources? Trying to decompose them, we see a combination of public sources as well as private sources. Among the public sources, you have government grants, sovereign funds, and policy-driven investments in specific sectors. We just listened to the last panel, and you can see there's quite a lot the Bank of Industry is doing to support the digital economy in Nigeria. And those are sort of policy-driven, in addition to some of the work that the partners to this conference, like the Germans and the European Union, are doing. So there can be policy-driven investment opportunities, as well as the typical area, which is the private sector, private equity firms, venture capital firms, and of course the angel investors who come in much earlier in the process. When you look at unlocking the public capital, you're looking at the DFIs. In the last decade, we've seen $2.8 billion has been allocated across 24 active digital development projects in sub-Saharan Africa, government grants and subsidies. South Africa's government is very proactive in this area and has fostered digital innovation and growth with various programs. Government initiatives, there's the Digital Economy for Africa initiative, aims to digitally enable individuals, businesses, and governments by 2020. Public-private partnerships, and from this platform you can see you can develop frameworks and incentives for PPPs, which can mobilize, we estimate, at least $2 billion for investments over the next decade. Sovereign wealth funds, African nations such as Nigeria that have sovereign wealth funds, we have the Nigerian Sovereign Investment Authority, can also allocate a portion of their funding towards the digital economy In Nigeria, we're also privileged to have the Ministry of Finance Incorporated, which, as a platform, has the ability to fund startups that obviously have reached some kind of scale before moving forward. And last but not the least, international aid and grants. And these funds can be directed towards capacity building, infrastructure, and policy development. And when you look at the private side, unlocking private capital for innovation and scale, you have the typical groups of venture capital firms. I talked about them. MoneyPoint, for example, raised $110 million last year through this means. There's the private equity area, like the European Investment Bank, has mobilized over 2.5 billion euros in the last 5 years. And of course, angel investors and crowdfunding. This is usually how you want to start at a very early stage. The Digital Africa Seed Fund provides direct funding of up to 300,000 euros to startups through various consortia. Then you can also have corporate venture capital. Quite a number of corporates have a bit of money available to support digital ventures. And we believe that if this is an approach that is adopted by many large corporates, you can see another $500 million available to fund investments in this area. And last but not the least, diaspora investments. The African diaspora holds quite a significant capital potential. In Nigeria alone, the Nigerian diaspora remits close to or just above $20 billion annually into the Nigerian economy. That has actually come up from the peak that was close to more like $25 billion not just a few years ago. But these are groups that can also be potent areas of capital raising for digital innovators. In recent years, we've seen some funds have been established with funding specifically available for African digital opportunities. Partech in February last year raised $300 million for early stage startups. Satgana raised $8.6 million to invest in climate tech startups in Africa and Europe. Accelerate Capital they raised $50,000 from USAID. I think that's going to be on hold for now, given the Trump government and shutting down of USAID. But Django Capital in October raised $78 million to address gender gap in Africa. And last but not the least, TLCom Capital in April 2024 raised $154 million to be invested in startups at seed and Series A funding stages. If you think about closer to home, there's also the debt and equity funding in 2024. There's been more move towards raising money through debt, and African startups secured a total of $2.2 billion through equity, while debt financing was just $1 billion. But that's declining from what it used to be. Tech companies in Nigeria raised $400 million last year, behind Kenya and Egypt, but still lower than the $410 million raised in 2023. Tech startups across Africa raised $1 billion in 2024, accounting for 47% of total funding for startups across the continent. And debt financing has gained traction in the African space. But another way to think about fundraising for scale and growth is mergers and acquisitions. We've also seen the incidence of people who have established platforms teaming up with others. Funke has talked about the opportunity that came to Make One, which has obviously enabled the company to scale up. We've seen in recent times Carbon's acquisition of Vela Finance, Diversified Wasoko and the Max AB merger, Pass's acquisition of QuickBox, closer to home, MasterCard's $200 million investment in MTN's Momo, and recently Paysac's acquisition of Brass. So the M&A is also another market for fundraising if you can't go to the traditional venture capital or private equity sources. And I would just like to highlight some notable fundings in Nigeria in the last year. At the pre-seed level, we saw Clever, a fintech company that raised $1.5 million at pre-seed. Similar event with Class, an edutech platform that raised $1 million at pre-seed. And on a bigger level, we saw Move, a mobility fintech, raising $100 million at Series B. And then obviously I mentioned MoneyPoint fintech, raising $110 million at Series B. So you can see there's quite a lot of opportunity for capital raising, although as I had highlighted at the beginning, the size of the capital has come off quite a bit. But people just have to be creative and resilient in what they want to do. And when you think about sourcing this capital, what do you need to do? Aside from developing your platform and making sure it has the capacity as well as the resilience to survive. When you're talking when you're thinking about securing public funding, some of the key criteria would include alignment with government objectives and policies. So it's important that promoters and founders think about which policies they can align their platforms with. Because in some cases there's already money waiting, but you just have to develop a platform that works and is in sync with that. And understanding, for example, what Bank of Industry is doing and some of the other big platforms in Nigeria could be a way to help. Of course, the socioeconomic impact consideration, how does this platform enable society to be better? Governance and regulatory compliance is critical. And then last but not the least, risk assessment and mitigation strategy. What do you have in place to support that? And when you think about, sorry, I didn't change the slide there. And when you think about key criteria for securing the private funding, of course, your revenue model and its profitability, the composition of your board, the strength. We get talked about governance and having the right partners on your board can also help make that right introduction. The traction and the performance metrics, what have you shown as evidence of traction to get you there? And last but not the least, competitive advantage and differentiation. How is that different from what else is in the market? So on that note, I hope I've teased you all a little bit about the sources of funding for innovation and scale. And I want to thank you for the opportunity. I would like to close with some of the VC firms that have a focus on Africa. Some of you might know, the likes of Aggressive Capital, CRE Ventures, Future Africa, funded by one of ours, EE Aboyeje, TL Capital, Eco VC Partners, Launch Africa Ventures, Alithia Capital, Ventures Platform, and last but not the least, Lofty Inc. Capital. Thank you.
Ladies and gentlemen, I believe we can clap better for